tomorrow might be one of the main anticipated day of this year when it comes to the stock market, when it comes to pretty much the entire economy and the investing world. Why? Because we have the Federal Reserve that is about to give us its interest rate policy for the month of June, for the month of July, and possibly give us a little bit of insights when it comes to what they're going to do in order to fight inflation. Because right now, inflation, it's at the center of all major concerns. Like since Thursday of last week, the S&P 500 is down 10% only on recession fears. Because if inflation continues to grow higher and sticks a lot longer than we anticipated, then maybe the Euro Central Bank will have no choice but to put the economy into a recession in order to prevent people from spending. With interest rate increasing, it makes things a little more expensive, especially as the US economy is made up of 2/3 of domestic consumption. And those 2/3 of domestic consumption are, I would say, at least 70% done with credit. So we are a credit-based economy. So interest rate increasing means a lot more expensive for people to buy stuff. But the market is also kind of pricing in the fact that increase of the interest rate will be around 0.75% or 75 basis points. Now, the thing is, usually the stock market tends to overreact. And at this point, there is no clear indication of whether they're going to stick with what they said a couple of weeks ago, which is 50 basis points increase in July and in June. Nobody knows exactly if they're going to say 75 or maybe if they're going to go 100 points. So 1% in June and July, and what they're going to say for the rest of the months to come. So let me share with you in this video how you can actually prepare and make some bets and react once the news is being disclosed. If you want to day trade, if you want to swing trade, or if you want to continue to invest in this crazy market. All right, we're going to see exactly some of the data behind how to perform in this day. All right, so first thing, let's look at all the scenarios. First scenario, which is scenario A, which is, I will say, 50%. All right, no, not 50%. Let's just say 40%. All right, so 40% chance of sticking with the exact same decision, which is we're going to do increase of 50 basis points June, July, all right? Because the Federal Reserve is not willing to surprise the stock market, because if the stock market is caught by surprise, they're going to shed another potentially, $1 trillion market capitalization. And this is hurting, 401ks, this is hurting retail investors. This is not bad for the market, especially as we're already sitting at the everything is already trash right now. So that's scenario A. If scenario A comes, I believe the market may react on the upside, but that is not guaranteed because inflation risk and fears is at the highest right now in the market. So if that is what definitely transpire tomorrow when they disclose the decision, maybe the market can see this as okay, they're not gonna handle this inflation right, so let me pull my chip off the table. So that's scenario one. Or they can say, you know what, maybe we have another 2 months, or another 2 months to kind of play the party, and then crypto will definitely rip off, stocks will definitely go higher, but not sure. Scenario B is they're going with 75% in June and 75 basis points in July. If that happens, I think the market will also be a little bit relieved, just because it will give them some direction. It will give them some clarity. It will give people, okay, this is what it's going to be. And maybe the market could also rally a little bit on this news, just because it means the Federal Reserve is really on to fighting inflation. Now, scenario C is, well, they surprise us. They surprise us with, I don't know, maybe 50 basis points in June and then 75 basis points in July. Or maybe they surprise us with 100 basis points in June and then 50 basis points in July. Anyway, anyhow, no matter the combination you want to see in scenario C in terms of a surprise, I think the market will react to that not quite good. And the not quite good, that is when, this is a gray area, because at this point, it doesn't matter if you go with scenario A, B, or C. It's like placing a bet right now because nobody knows. But some of the strategists and people who follow the Fed say now that there might have been a leak from some insiders that actually gave some insights to the whole market that they might go with 75 basis points, and that's what they're going to do. And that's how the Federal Reserve is actually giving some heads up to the market, because they would like for the market to kind of do the job on their own rather than them breaking everything. But the bottom line is, it doesn't matter what we're going to have as long as it's already kind of priced in, which is scenario A, 50-50, scenario B, 75-75, because it gives direction, it gives clarity, and then people can now adjust and money can flow back into some of the assets in the market starting tomorrow. Now, how can you use this in your, for your benefit if you're on a day trade or if you want to swing trade? Now, the thing is, because it's a bet, I wouldn't go heavy with my plays. I will potentially, get into some of the beaten down stocks, like energy is my favorite. You know that. Maybe look into healthcare. Maybe look into some of the good companies, with good earnings potential in the tech sector. Those are going to be somewhere the pops will be, like maybe an AMD, the semiconductors, etc., etc. Now, if you think we might go with scenario C, which is going to be a surprise, then definitely want to be short selling. But again, nothing is guaranteed based on how the market will react, because we've never been in such a position. But what is good is, if you want to invest, you can use this as an opportunity to either buy the dip or dollar cost average, because I guarantee you, in my experience, the market is going to overreact if it's a bad news, which means a surprise, and that's how you want to take advantage of this. So let me know in the comment section what you guys think. That's how I see things going tomorrow. And I placed some bets yesterday on some of my favorite companies, and I was already green today, but as the market tanked towards the end of the day, my gains were evaporated. But I'm still kind of, keeping a little bit of cash on the side, just in case things go south. I will need to double down in order to average down for a swing trade, maybe when later this summer things get better, because they will get better.